All right, perfect. Ladies and gents, thank you so much for tuning in today. Much smaller group than as usual, I guess. I appreciate that tuning in whilst at work. I appreciate the dedication. Hoping to share as much value as possible over the next 60 minutes or so. And then obviously we'll open things up for a little bit of Q&A. But this is the penultimate session. I know maybe this is a bit of an awkward timing for some, obviously given working hours and things like this. But obviously the session will be recorded, and next week I'll try and tailor it as best I can to a time that works best for absolutely everyone. So this week, I want to talk about super important topic, and that is, as I'm sure most of you are gathered from the title, we're discussing all things to do with confidence. Now, I threw out a poll inside the Discord this week, and we had a fair few responses. And what we had was the most common, or the majority have voted that it was 52% of people had voted that at some point in time they either experience too much or too little confidence. And this probably poses some kind of hindrance in their trading. After that, we had 38% of people that lack confidence with their trading. And I think actually these statistics are very normal. They didn't surprise me whatsoever. And I'm hoping as we go through today's session, it's going to become more and more obvious as to why these are the obvious choices that I kind of expected, what the impact of not having the right confidence is, why we tend to not experience the right level of confidence, and then, of course, most importantly, how do we actually cultivate the right level of confidence? So what both myself and David have done over the last few weeks, essentially, is try and give you guys the best foundation and framework possible to set you up to actually start doing this by yourself. As I was talking about just before the recording kicked off, as much as we want to make trading a group sport and experience, it really is a one-player game. It really is a game where essentially you are against yourself every single day. Most people think they're against other people. Most people think it's them against the markets, but in reality, it is you against yourself each and every single day, because most of the battles that you'll tend to face, once you've got your strategy down and understood, and you know how you should be getting in, how you should be managing, and how you should be getting out of those positions, the only thing that's really going to get in your way is the things that happen mentally. They are the emotions. They're being swayed by volatility, noise, other people, market sentiment, right? There are all these things that are potentially going to be working against you to help distract you from the plan that you had in place. Now, one of the things that forms a massive part of your foundation is your level of confidence. And I'm hoping if you're tuning in either to this call live, or maybe you're watching this back on a recording, which I'm sure many of you will be, you are at some point, you're going to have experienced this swing in confidence. And I'm hoping over the last few weeks, I've done a good enough job to emphasize that one of the most important things that you could do early into your trading career, we'll call it, is actually spend time backtesting and gathering data, right? Doing the work to actually lay the right foundations is going to be one of the most important things that you do in terms of your psychology. A lot of people dismiss the importance of backtesting because they say it doesn't work because it doesn't involve your emotions, and therefore it's not a true reflection of what trading is like. And to a certain extent, there is truth to that, right? It doesn't involve emotions. But what a lot of people fail to understand is a lot of emotions are involved for two reasons. One, you don't really know enough about how your strategy works over time, and therefore you don't have the right level of confidence to stick with it, especially in the tough moments where nothing seems to work. And the second side of that is most people don't have the right expectations. They don't know how often they're likely to win or lose. They don't know how often they're likely to go on a losing streak or a winning streak. And all of these things play a crucial role in terms of laying the right foundations so that you don't act on a fight or flight impulse. And that is very important as a trader. When we talk about keeping a clear and calm mind to be able to make logical decisions so that you can manage risk in order to stay in the game and let your edge play out over time, keeping that clear mind is most important. And if you're not doing things in a way that's going to cultivate or allow you to do that, you're ultimately setting yourself up for failure. So this last, I guess, very structured session it's largely around the idea of how do you curate the right level of confidence? This is not just about building confidence. We're obviously going to cover that as well, but we're going to talk about what happens when you go live and you have moments of underconfidence or overconfidence, because these things are going to happen to each and every one of you. And they're not things that they ever just completely disappear, and they never impact you in any way. At every point during your journey, you will experience a battle between overconfidence and underconfidence. And what you have to do is learn to be able to find the middle ground to keep you level-headed, to keep you cool, calm, and collected, so that you can logically make decisions to best manage your money. Okay? So what I'm going to do, as always, I'm going to pull up a whiteboard for you guys, just to create some brief notes on, and to give you guys something off the back of today's session. So this is week number 7, as I mentioned. And today we are talking all things related to confidence. Let's just swap my screen. Okay, so I want to start up here in the top left, right? I want to talk about the impact that not having the right level of confidence can have on you as a trader. Because when we talk about this idea of confidence, depending on who you speak to, most people will immediately think of a lack of confidence or too much confidence. And this is going to be dependent on the specific issue that they're dealing with or what they're experiencing at this moment in time. Now, what I say to most people is actually, you're going to experience both of these at different times during your trading. And what you need to do is be able to identify them and learn how to regulate those experiences. Now, for those of you that only experience one or the other, right? We had 38% of you based on the poll that mentioned they just lack confidence, and then 52% had picked you sometimes suffer with a little bit of both. Now, I want to start actually by covering lacking confidence, because I think this is probably the more common one, and it's going to have a bigger relation to most of you watching this call back. So when you're lacking confidence, 2 of the most common issues that you're going to experience, which is going to ultimately impact your performance, is missed opportunities, right? Seeing something potentially play out, understanding that this kind of ticks all my criteria, and then you just don't have enough balls to pull the trigger. You don't have enough to get you over the finish line to actually put money at risk and say, I'm comfortable enough to know that regardless of what happens, I'm happy to win or lose in this position because it fit my plan. Therefore, you end up passing up on a bunch of opportunities, and this sways how your edge plays out over time. Because if you pass up on an opportunity that wins, you're going to kick yourself. And if you pass up on an opportunity that loses, you're going to feel good about yourself in the moment. But what you're doing is cementing a bad habit. You're cementing the idea that it's okay not to pull the trigger when my setup presents. And then the next time it happens, when you're going to take a winner, you're going to screw yourself over, right? You're not going to have the right level of just ability to pull the trigger when it's time to pull the trigger, okay? So at this point, you're also going to experience a lack of conviction, right? So those of you that actually manage to pull the trigger, they get to the stage where they can actually execute the trade. Maybe some of you, a lack of confidence is going to hit you by not trusting your trade enough to actually go to target, not trusting your trade enough to leave your stop loss where it is, knowing that if it hits this, my idea is wrong, right? When you lack conviction behind your approach to the market, it's going to give you a very inconsistent approach. And that is just as detrimental as any other bad habit that you could potentially have, if not probably one of the worst. If you don't have consistency as a trader, you don't really have anything. You don't have an edge in the market, because you can only implement your edge if you're being consistent to your plan, and as long as you have the data to be able to back that up, right? So lacking confidence is a massive, massive issue. Missing opportunities and lacking conviction to actually see those plays out plays a massive, massive role in terms of how you perform over time. Now, on the other side of the coin, we have overconfidence, right? And if you're experiencing overconfidence, you're going to likely go through a period of overtrading. You're going to be overestimating your ability in terms of what may happen next, because maybe you've had a a good string of winning trades. And the one thing that you recognize is that you start to believe the market does what I say. And therefore, if I'm buying, the market's going to go up. If I'm selling, the market's going to go down. And we develop that level of delusion in believing the markets just do what we think is the right thing to do. So as a result of that false level of confidence, we develop this ability to start over trading. And again, if you're rewarded by that bad behavior, it's cemented as a bad habit, and then it becomes harder to break going forward. And if you're punished by actually losing money and being wrong in that situation, again, you're often put in a position where you're not rewarded for that situation because you're kicking yourself for breaking your plan and essentially doing the wrong thing. So overconfidence can be just as detrimental. And one of the biggest issues with overconfidence is the idea that we ignore our risk management, right? We ignore our own rules in terms of how we should be thinking about and applying risk management. So both of these are massive issues. I wouldn't say one is worse than the other. They are both likely to impact you in different ways, and they're likely to have a different impact on your performance depending on the person. For some people, lacking confidence is going to be the worst one. It's going to be the performance killer. For other people, it's overconfidence, right? They have no issues pressing buy or sell. They have no issues putting money on the line. Their problem is they can't stop, right? They can't help that ability to overtrade. They can't help that ability to double down on certain positions because they have this delusional level of confidence that their strategy is going to work. And now, what I want to emphasize at this point is that neither one of these things are just good or bad. Actually, what you need is a healthy balance of a lack of confidence, but also with a healthy balance of overconfidence. And when you find a balance between those two things, you tend to find a neutral point where you can actually sit, you can focus, and you can be confident in your ability enough so that you can do the things that you're supposed to do, but not overconfident that you're going to neglect certain elements of your trading. Okay. So this is the impact that a lack of the right balance of confidence is going to have on you. Now, why do we tend to experience this? Well, the first thing I want to talk about is our belief system. And again, for those of you that have been through these sessions, you will understand the importance that I place on the power of the beliefs that we hold. Because the framework that I've shared with you guys is this idea that essentially what we're trying to create throughout this bootcamp is consistently profitable traders. Consistently profitable traders is essentially it's an identity. It's something that you embody and it becomes part of who you are. It's a way that you operate, but it is part of who you are as a person. If I told each of you watching this call to stop brushing your teeth going forward, it's going to feel weird because you've become so used to brushing your teeth that it just feels normal in order to do so. And you can't imagine living life in any other way, shape, or form, right? So your identity is essentially a makeup of your habits. Your habits all come from the actions that you repeat. You take those actions because usually you're being influenced by emotions. Emotions come from thoughts, and thoughts are a byproduct of your belief system. So when we're looking at any good or bad habit, when we're looking at any thought or action or emotion that exists, everything can be rooted back to a belief system that is either empowering you or it's limiting you. And the outcome that you're getting is really going to depend on the goals that you're setting yourself, right? If you're moving closer towards your goals, it's likely that you've got an empowering belief system that is allowing you to move in that direction. If you've got a limiting belief system, then it's likely you've got a set of beliefs which are holding you back from achieving your goals. Because everybody on this call and everybody watching this back will understand consistently profitable traders do exist. There may be a very small percentage of them, but they do exist. The moment you understand that, then you understand the end goal is possible, right? It is possible. And the only thing different between you and the other traders is a belief system that allows them to support a certain way of thinking, a certain way of feeling, and a certain way of acting, which allows them to be consistent with their approach to make money from the markets. Okay. Now, there are three different things which I think have a big influence over your levels of confidence in the market. And those three things I'm actually going to throw on the board. so you guys can see those. But these generally are the three ways in which I see most people have a different belief system, which leads them to entirely different outcomes. The first one is probably the most obvious, right? Your strategy and the beliefs in which how you enter, how you manage, and how you exit the markets is going to determine what sort of results that you're capable of achieving, right? How you go about entering the market, how you manage, how you exit is always going to be different because generally speaking, most of us are human beings. What allows me to be consistent is different depending on what's going to make you consistent, and it's going to be different for David. And this is why I think I saw in one of the conversations, David was stressing the idea that there is a big part of discretion that comes into play, which is going to be the result of a little bit of experience over what we're doing. So when you're talking about a system which allows you to have a little bit of discretion over what you're doing, that means your strategy in some way, shape, or form is going to is going to be different for different people, right? Now, as well as your strategy, we also have risk management, right? And again, how you manage risk, how you execute that into the market is going to be completely different. And that is because if I asked you guys, how much is too much risk? Right? You guys are going to start formulating a number in your mind. Maybe you're going to think 3% per trade is a very high amount of risk, or you're going to think 5% per trade is a very high amount of risk, or 10% per trade is a very high amount of risk. But again, risk is all relative. Risk is dependent on the person, and risk is also dependent on what you believe and how your strategy is going to perform over time. My strategy in a good period is going to be operating at around 40% win rate, right? That means it does not make sense for my strategy to actually be operating with a high level of risk because I'm going to encounter more losses. I'm more likely to experience losing streaks. And when those things happen, if I'm risking a high amount of money, the likelihood that I'm going to blow up is way higher than the person that has maybe a 60 or a 70 or an 80 percent win rate. That is, if you have a strategy that allows you to have an 80% win rate, and I'm not going to say they're impossible, but they are rare. If you have a strategy that allows you to do that, it's much more likely that actually you could have a very different view around risk. Maybe you'll be comfortable taking 3%, 4%, 5% per trade because 8 times out of 10, 80 times out of 100, 800 times out of 1,000, when you put a trade on, you're expecting a positive result because that is how your strategy operates. It's been proven with data, and that's what it shows you over time. And the last thing is the market behavior. People will be driven to believe that the markets move for different reasons, right? You're going to have fundamental traders that will tell you fundamentals are the most important thing in the world. And if you neglect them, you don't really understand the true story of the market. The markets are driven by interest rates and supply and demand and all of these other factors. But if you're talking to, again, could be a very successful technical analyst, they're probably going to be telling you, well, no, actually the market's going to move here because I have a Bollinger Band or I have an RSI or I have a level or an order block or a break of structure, which indicates that this is going to happen next. Your belief system around why the market moves in the way that it does is going to have a huge influence over how confident you are in your ability to believe or to think and forecast what happens next in the market, right? The common situation that most people have is if you're a purely fundamental analyst, it's likely that you have the longer term direction right, but you don't have the short term ability to be able to time the market. And that's what you're going to try and use some level of measurement to gauge when the market has started to turn in your favor. If you're a purely technical analyst, it's much easier to get faked out of moves when you don't really understand the true direction of the market. If you have a little bit of both, right? Maybe you're going to have some flaws in your system or you're going to have too much going on in your mind to be able to understand what comes next in the market. But essentially, what I'm trying to describe here is that your belief system is independent to you. It makes you an individual, and your beliefs around your strategy, your risk management, the market behavior, these are all things which are going to influence your confidence levels in the market, right? And we're going to talk a little bit more about that in just a second. But what I want you to recognize at this stage is that everybody is independent. Everybody is different. Everybody is going to have a different mode of operation. And until you accept that this is the reality of how it works for most people, this is why most people struggle with the psychological element. You could teach a monkey to draw support and resistance, to draw order blocks, to identify when an indicator is high or low, to throw on pivot points and say this level has been met, right? You can teach these things on a very, very simplistic level. What makes it difficult is not the strategy in and of itself. It's the mindset and the thinking behind it to allow you to be consistent over time. And this is why I always like to say, start with the strategy. Start by having a good baseline and foundation and create that level of confidence. Because if you have that, it actually makes the latter part very, very easy, right? So the belief system is important to understand because it has a huge impact on your level of confidence, because ultimately every single one of us is absolutely different, okay? Now, a big part of why our confidence tends to change over time is going to be linked back to a psychological concept called cognitive biases. And again, if you're familiar with these sessions, if you've tuned in and you've seen all of the previous ones, you're going to understand exactly what this means, right? As a brief refresher, a cognitive bias is an error in the way that you think, which impacts the way that you perceive, the way that you interpret information, and that ultimately changes the way that you act and the way that you see the world around you, right? This is something that we've covered in a previous session, but it's important to talk about today because it plays and it has a direct impact on your confidence levels. I want to talk about two of these, which give you a very good idea of how psychology impacts our ability or our level of confidence throughout our trading day or trading week, right? The first thing I want to talk about is recency bias. And this is the tendency to put more weight on things which have happened recently as opposed to what happens over a larger sample size of time. Okay, so recency bias is the general and natural human tendency for most of us to put more weight on things which have happened recently as opposed to what happens over a larger sample size of time. Now, I want you to think about how this impacts and how this rolls over into your trading. If, for example, if we know that we put more weight on things which happen recently, think about what happens if you experience a string of losing trades, for example. Right? You experience 2, 3, 4 losing trades in a row. Think about what that does to your mentality. If we know psychologically we put more emphasis on things which have happened recently, if you have experienced 2 or 3 losing trades in a row, maybe for some of you, even if it's experiencing 1 losing trade in a row, then that could be enough to actually start tipping you over to the point where you start doubting and start lacking confidence in your strategy, because your mind is telling you, I am experiencing pain because I'm following this set of rules. If I keep following this set of rules, why would I start to feel any different? Why am I expecting a different outcome? Because in most other areas of life, and again, this is something that we've discussed on previous sessions, we're used to this idea that a fixed input leads to a fixed output. If we are in a position where we work hard or we do all these right things, we diet the right way, we go to school the way that we're supposed to, we are taught that we should be rewarded, we should be successful, there should be some good opportunity at the end of that. In the markets, it doesn't necessarily work this way, right? The markets are difficult because you could do everything right and still fucking lose money. And that's one of the hardest things to accept as a trader. Recency bias plays a huge role in terms of why we tend to have this big sway in confidence over a period of time. So what I want you guys to understand is that on the losing side, this can play a role, but also on the winning side. If you've experienced a winning trade, 2 winning trades, 3, 4, 5 winning trades in a row, recency bias will dictate, if you are a human being, then you are far more likely to start to experience a level of overconfidence. And again, that's going to tip you over the edge. And it's going to make you more likely to, again, do what we discussed above, which is overtrade and possibly ignore your risk management over time, right? So we tend to do this not just in trading, but in all areas of life. So, for example, I want you to think about how you would react if you've recently been in a car accident and you were driving. You were the driver, you got into a car accident. It's likely that the next time you get into this accident, you are going to be, the next time you get into the car to drive again, you're going to feel more weary. You're going to be a little bit more anxious and you're going to be a lot more perceptive about what's going on because you're aware that your recent experience has been, you've just been in an accident. You may have had 100, 1,000, 5,000 more successful drives prior to that experience, but your most recent one has told you that it's good to be anxious. It's good to be cautious. And this exact same scenario applies in the market. So whether you're winning, whether you're losing, recency bias is going to make those situations much more impactful. And again, that is what is likely to put you in a position where you're going to either experience overconfidence or underconfidence. The second cognitive bias that I want to run by you guys as a refresher, because again, these are all things that we've covered before, is confirmation bias. And this is we tend to find evidence to support the narrative in our mind, right? So if you have an idea that you want to make, let's say, 5% a week, right? That's your goal. That's what your data maybe has told you is possible. And that's now your expectation going forward. Guess what? Your mind is going to create those opportunities to make it a reality for you. If you are going into the markets today and you're saying, right, I want to trade euro dollar and I'm only going to be bearish today, right? I believe the market is going down and I'm only looking for bearish setups. You could have the most bullish, obvious fucking day possible, but because of confirmation bias, your mind is only focused on finding factors, narratives, evidence to support a bearish setup. And I'm not saying you should flip-flop between your bias. I'm saying understand that this is a natural psychological phenomenon, right? Between recency bias and confirmation bias, these are two massive reasons why we tend to either, when we get into a period where we're lacking confidence or we're feeling a little bit underconfident, we're likely to amplify those feelings in our head because we're looking for more reasons to support why something will or won't work. On the flip side, if you're looking for a reason that something will work, you're going to be doing everything to prove that it's going to work. I'm sure I'm not alone in this, but I know for a fact I've been in this situation and many people share this sentiment. You've got into a trade, it's ticked every possible criteria that you have, and the market has started to move against you. And it hasn't quite hit your stop loss yet, but it's not looking great. And what do? You start reanalyzing the chart. You start drawing up and be like, did I miss a level? Could I have added a Fibonacci here? Is there a trend line that goes through here? These are not even things that you may not necessarily use on a day-to-day basis. But because your mind is supporting this idea of confirmation bias, right? We're looking for reasons to support that existing narrative. We're going to find any reason that makes sense to stay in this trade. And this is often why people will move or remove their stop loss entirely. And for them, they can rationalize this reason why it makes sense to stay in the market. It will make no sense to anybody else staying on the outside. It will be so obvious that you're just throwing away money in that situation. But again, your mind finds whatever you are looking for. In the UK, again, an example of how this applies to our everyday life. In the UK, for anyone that's in the UK, I'm sure you're going to be familiar with this. We have this game we call the yellow car game. You're out with your friends, your boys, whatever it is. And if you see a yellow car in the road, you're allowed to punch your friend in the arm. And what immediately happens, the moment you start looking for a yellow car, you spot every single yellow car that is available. And again, this applies in many different situations. Have you ever bought new shoes or clothes and then you start seeing them everywhere? Have you ever purchased a new car and then you see that car everywhere on the road, right? You start to notice these things because your mind is more focused on them. And this is a prime example of confirmation bias. So these are two psychological factors which tend to work against most people. And as a trader, this is something that's going to influence you on a day-to-day and a week-by-week basis to either make you lack confidence or to feel a little bit of overconfidence, right? The purpose of me making you guys aware of these things is I want you to understand these are natural for every human being. I want you to understand that, yes, we experience recency bias. And therefore, if you've been in a situation whereby you've experienced 2 or 3 losses, you need to expect that your mind is going to make you doubtful of your strategy. You need to expect that looking at a new strategy or changing your strategy in some way is going to feel much more attractive despite everything that you've got written down. You need to expect that your mind, if you're fixated on a certain idea or bias, your mind is going to create opportunities to make those very, very obvious to you. And unless you are very aware that these biases exist, it becomes so easy to just subconsciously get caught up in them and have them dictate your thoughts, your feelings, and your actions. And therefore, you suddenly fall prey to all these different psychological biases without even really being conscious of what is going on for each and every one of you. Shane says, do our biases get reset after going to sleep at night? I find myself not being so cognizant of these biases after waking up. It seems like I have to force myself to start thinking thinking on the correct ways all over again in the morning. So Shane, the answer is, at least from my understanding, it's nothing to do with going to sleep and waking up. It's everything to do with time. Right? What you're doing between going to bed and waking up is you're adding an element of time where you're asleep and you're giving yourself time to actually reset and gain some perspective. So one of the most common solutions that most people present you with when you're experiencing some kind of frustration or psychological battle is just to walk away from the charts, right? When you walk away from the charts, you can't change what's happened. You don't fix the root cause, but a lot of the time you can actually come back feeling a lot better because you've given yourself time to process what you've experienced. Now, I'm going to put this in the chat. I'll actually add it under this this section in the whiteboard as well, because I think this will make for good reading material for you guys. There is a fantastic book called Thinking Fast and Slow by Daniel Kahneman. He's a fantastic, or was, I should say, fantastic psychologist. Highly recommend, if you guys haven't read it, I would highly recommend checking out this book. I'll put it also in the chat for you guys that are live, if you want to copy and paste and keep a note. This idea of thinking fast and slow basically describes the psychological process that most of us go through when we have our thought process. And what he describes this as system 1 and system 2, right? System 1 is this idea that all of our impulsive, immediate emotional reactions to a situation, they come from this one area of your mind, which he labels system 1. So it's that area is in control of all of your natural responses, all of your immediate reactions, the frustration, the annoyance that you feel every time something happens in the markets that you don't really expect. System 2 is almost the opposite of this. System 2 is the logical part of your mind. It's the side of your mind that says, what's the best thing that I could do in this scenario? And it's weighing up all these decisions, and it acts a little bit slower as a result. But usually, more often than not, it gets you to make a logical decision. Now, as an example, for the best way to explain how these work for most people on a day-to-day basis, for those of you on the call, have you ever been in a situation whereby you've been in an argument with someone and you've said something that you probably didn't mean, but you were pissed off at the person, and therefore you just said it, you blurted it out, and you realized either immediately or 5-10 minutes later, maybe a day later, you think, you know what, fuck, I shouldn't have said that. I went too far with what I said, and I should not have said that. That is a prime example of system 1, the immediate response, and system 2, the logical response, the logical mind kicking in after. And again, this applies to our trading. We take a revenge trade, or we overtrade in a certain situation, and then how long does it take? 5 minutes, 10 minutes, an hour, a day? But something clicks at some point and we're like, fuck, I shouldn't have done that. I shouldn't have acted on my emotions. I did the same bad habits that I'm trying to break over and over again. And again, this is a prime example of system 1 and system 2 coming into play. Now, what he teaches inside of this book is the factor that often gets you from system 1 to system 2 is time, as we talked about with Shane's example, going to bed and then waking up in the morning. And it gives you a little bit of space from the situation. It allows you to create some new perspectives. It allows those emotions to calm down a little bit, and you just see things through a fresh pair of eyes, right? The other side to this, which I like to teach often, a way to speed up the process of going from system 1 to system 2, is actually teaching ways to just shift your perspective, right? Start thinking about questions that will change how you're thinking about this situation. How could this situation be lucky for me? What can I learn from this situation? How could this situation be worse, right? All of these little things that we can say to ourselves, which get us to start reframing a situation and thinking about them from a different perspective. And therefore, it creates a break in our normal pattern of thinking. And again, allows you to go from system 1 to system 2. But yes, to answer your question, Shane, in a very long-winded way, what you're saying is correct, right? It's that element of time, which can be very, very important, but it shouldn't be the overall resolution, right? As we discussed when it came to the emotion session that we covered last week, is that with emotions, you really want a proactive and a reactive response. And the proactive response is all about best understanding why you have that problem. When you understand why you have that problem and you can go in with the right expectations going forward, then actually creating that right level of confidence becomes, creating the right expectations when it comes to the emotions becomes far, far easier. Okay. So highly recommended reading material. Again, if you guys haven't read it yet, I would definitely go ahead and check it out. But yeah, these are a few of the psychological reasons as to why we experience this change of confidence. Now, with most sessions that I do, you guys will know I follow a very pretty much familiar format, which is we talk about the impacts, I explain the issue in some detail, then we talk about a little bit about the psychology. And often in a lot of situations, what you can do is by having more clarity around the psychology, you can actually come up with some really inventive ways to start to use psychology to work for you rather than against you, right? And that's what I want to talk to you guys about today. I want to talk to you about this idea of actually managing confidence, because what we established and what the poll has suggested on Discord is that sometimes we go through periods where we have low confidence and sometimes we go through periods where we have high confidence. And now that we understand the psychology behind those things, it makes sense, right? We understand that if I take a few losses, I'm likely to feel a lack of confidence. If I'm looking for a reason to be in a trade, I'm going to find one to be there. And that could support the idea of overconfidence. And ultimately, neither one is good or bad. You need an element of both in your trading, but you need to find a balance point in the middle. The tips I'm going to give you below are to help you to create that balance point. Okay. So first thing is first, as with, excuse me. As with most psychological issues, in order to be able to resolve them, you need a heightened level of self-awareness. You need to be able to understand what triggers a change in confidence for you. And this is something that you can actually start picking up from your journals, right? I always encourage that your journal is the best place to figure out the patterns between your thoughts and your actions. So inside your journal, if you want to find some of the reasons as to why or what is changing your level of confidence, there are a few questions that you can actually ask yourself. So question 1 is, where are you? Question 2 is, who is around? Question 3 is, what is your emotional state? And question 4 is, what happened just before your confidence changed? Right? If you are trying to discover the pattern behind figuring out why your confidence is changing, go over your journals and I want you to reflect back on those 4 questions. If I could spell properly. I want you to reflect back on these 4 questions. So sometimes for some people, your confidence will change depending on where you are, an actual physical location. You might be a great trader at your home setup. You might be a shit trader when you're trading from your phone and you're on the go. Who else is around you? Are the people around you supporting a mentality that allows you to be a good risk manager, confident in your ability, or are they constantly beating you down? Are they supporting the idea that you should be a gambler and you should just be burning your money away, right? So the people around you can have a big impact on your level of confidence as well. The third one is your emotional state. Are there any obvious emotions that are already at the surface? Anger, frustration, wanting to take revenge, FOMO, all of these things that can drive a change in your state, which can impact your confidence. And the last thing is an external event, right? What happened just before your confidence changed? Did you take a loss? Are you coming off the back of a losing week? Did you have an entire month that you spent in drawdown? And that's likely to weigh in on your psychology. When you can better understand the pattern in which your level of confidence changes, it's likely to have a much greater impact on your ability to break free from those. And that's going to be very, very beneficial for you. When you can understand, after I take 2 losses, my pattern shows me that I'm likely to start doubting my strategy. I'm likely to start hesitating before I execute. Or maybe it's the other way around. If I take 3 winning trades in a row, I start getting ballsy. I start thinking about putting the farm all in one position. And again, it doesn't really serve you very, very well. Have you heard about somatic markers? It's not something I'm familiar with. Feel free to, I have no idea what those are. Feel free to explain them in the chat. That's what I experience. My brain connects certain places with certain emotions. Oh, okay. So I understand that idea of that connection. I've just never heard the term somatic markers, right? We tend to experience this in many different areas of life. And I think the most common way we experience this, I don't know if this is just locations, which you're referring to. I think the most common one for a lot of people is music, right? You could put on music in your ears, or you can hear a certain song, and it will take you back to a certain place, a time, an emotional state, an experience that you had, and it creates those anchors, right? In psychology, that's what we often term these things. When you create a connection between an external event and an emotion, we call those a psychological anchor, which sounds very similar to what you're describing here. And again, your example is perfect. Kitchen table is linked to eating. This is why people often say it's a bad idea to work in bed, because it ruins the connection between your bed and sleep. So yeah, the idea makes complete sense to me. And again, I get where you're coming from when it comes to finding these patterns. So yeah, completely agree. And I think we're both thinking about things in the exact same way, right? So managing confidence starts with higher level of self-awareness. Use the journals that you're keeping. And I can see from the work that you guys are doing with David, you're starting to keep or build good detailed journals, which over time is going to give you what I always like to call the Holy Grail. It's going to give you all the data that you need to figure out where you're going wrong, how you can improve, and what you can do differently going forward. So make sure you're keeping up to date with those journals, because they are going to be your blueprint of success. Okay. Okay, we've covered all that. Okay. The thing I'm going to put emphasis on next, and again, I'm hoping I'm drilling this into your mind as to the importance of this, but you need data, right? Your confidence, and especially this is going to be for those of you that especially lack confidence, the more data you have, the better it is for your psychology. What tends to happen to most people is they lack a certain amount of data, and therefore they haven't built the right level of confidence, and they lack the correct expectations to truly understand how their strategy is likely to play out over time. The more data you have, the better it is in terms of your confidence levels, because you're basing it on something that you're actually doing in the markets and not something that you just think or hope or wish may happen, right? Now, again, the analogy that I share, and I'm sure I've probably shared it with you guys previously, which is this idea of speaking on stage. If I asked you to stand up on a stage and give a presentation on a topic that you knew nothing about to 1,000 people completely live, and I just threw you on with 0 prep time, on the first day, how are you going to feel? The chances are you're going to feel nervous. You're going to feel anxious. You're not really going to be prepared, and you're probably going to be worried, right? You might break a sweat. You might stutter. These are things maybe you don't normally do, but because of the emotion that you're feeling, because you have this lack of confidence, you're likely not going to be confident in your approach. But if I asked you to do that same presentation every single day, I forced you to do it every single day for 100 days. On day 100, you're likely to feel very differently as you did on day one. You might not be super confident, but I can promise you, you're going to feel a lot more confident than you did on day one, right? You might have developed that level of confidence. And again, it's going to depend on you as a person. But ultimately, data and experience is what gives you that certain level of confidence. If you lack that foundation, and I'm hoping you guys are starting to understand, this is why I'm putting so much emphasis on this from the very beginning. Logging that data inside your journals, going through and doing a good large sample size of backtesting. This is what's going to give you the confidence to stick with your approach in the long term. And it creates that foundation that most people truly lack. Okay. Next point is probably an interesting one. And this is where we start to, now that we understand a little bit of the psychology, where we talked about the cognitive biases around what we experience, this is where you can actually start applying them to work for you rather than against you, right? So what I talked about in our previous section is how things like recency bias often work against most traders, right? They often work in the background. Most people are not aware of this idea that we put more weight on things which have happened recently as opposed to what happens over a larger sample size of time. And again, this tends to work against us. Now, what I say to most people is when you understand that the human mind naturally puts weight on things which have happened recently, we can actually start using this in our favor. So what I say to most people is if you're lacking confidence, that is your sign to reflect over setups that work perfectly, right? One of the best things that you could possibly do in these moments is have a collection of screenshots, data, be able to filter through your journals to show you that I followed my plan. And when I did this, this, and this, it presented this absolute picture perfect fucking outcome. You got in at the exact high, you got out at the exact low, even looking at situations where it wasn't completely perfect, but allowed you to take some money out of the markets. When you give yourself that recent experience, it's going to help to boost your confidence and counteract the lack of confidence that you're experiencing from maybe the last loss that you took. On the flip side, you can also do this if you're feeling overconfident, right? If you're feeling overconfident, that could be a sign to actually start reflecting and filtering your journals to look at setups that have failed miserably, that have not worked out, right? So one of the things that I would suggest is when you guys are doing your back testing or your collection of data or you're going through your journals, actually start to take copies of screenshots of where your setups have worked and where they haven't worked. So you want to see a comparison between I followed all my rules, I got into this trade, and it was picture perfect. It worked perfectly. It allowed me to take my money out of the markets. And you're going to build a folder just full of those experiences. On the flip side, you're going to build another folder that is designed to humble you. It's designed to show you that I'm going to follow all of my rules. I'm going to do everything that gave me an A+ perfect outcome the last time around, but it failed fucking miserably. You got into the trade and it stopped you out in less than a minute. And actually it slipped you and it cost you more money than you would have thought, right? Because these are the realities of trading sometimes. Not every trade is going to be a winner. You're going to take some losses. And when you've taken a loss that's worked, that's been in line with your plan, the best thing you could do is actually use it as data and leverage to humble yourselves in the moment where you need it. Because based on the psychology of what we discussed, if you have taken 2, 3, 4 trades, your journal has now told you after you've taken roughly 3 winning trades in a row, your psychology starts getting swayed and you start feeling a little bit ballsy and you want to go all in. You want to push the next trade even though all your criteria is not met. All your criteria has been met and you're thinking about doubling up on your position size. Those are the moments you need to be humbled. Those are the moments you need to leverage the idea that we as human beings are swayed by the most recent experiences that we are showing ourselves. And therefore, if I look at a folder that's either all good experiences or all bad experiences, I can actually start to impact my level of confidence within myself, right? But again, it relies on you to always be aware of what you're experiencing and then actually have these bits of data collected and ready for you to be able to start manipulating your level of confidence. Mehul says, after every trade, I always write down, did I follow my plan? If it's a losing trade, what can I do better next time? It really helps me to be more accurate next time. Perfect, right? And again, this is where you're using your journals to actually create some logical outcomes regardless, some logical next steps regardless of the outcome of the current trade. Did I follow my plan is probably one of the most important questions that you could ask yourself. Because what most people naturally do is they assess their performance based on P&L. And most people forget the idea that you could do everything wrong and you could actually still make money. And this is not really beneficial for you as a trader. Now, what I would say, Mehul, and again, you may already be doing this, but I want to put it out there for anybody else that is watching, is when you're taking down these notes, you only want to start tweaking and making changes, usually over a large sample size. You want to remember that if you've taken a losing trade and you've identified something that could have been different, you have to remember this idea that there is randomness in the short term and probability in the long term. If you've got a sample size of your last 50 to 100 trades and you're saying, right, 60% of the time, if I had done this, this, and this differently, I would have either made that a winner or I would have ignored that trade altogether, or I could have got out a break even or with a smaller loss than I already did. Fantastic. What you don't want to do is say, okay, I've just taken a loss yesterday. I've identified that if I had done this differently, then I'm going to change my strategy tomorrow to do this, this, and this, and we'll see what happens. And what you tend to do is you start trying to make changes based on just complete randomness of the market and not true probability. So as long as you've got that mentality in your mind, absolutely perfect approach. Okay. The last thing I would say is repetition is important, right? One of the biggest, why can't I spell today? One of the biggest examples that I talk about when it comes to habits is the idea of brushing your teeth. The vast majority of people I speak to, they're not really excited about brushing their teeth in the morning or in the evening, or hopefully both for most people, right? They're not really excited about that idea, but they do it because they've been doing it every single day, or at least most days, throughout the vast majority of their life. They have repetition behind them. And so what you want to focus on is this idea of consistency is greater than intensity, right? When you focus on the idea of doing these things in terms of rebalancing your level of confidence is beneficial, it's actually going to start to become more normal, right? It's going to become an ingrained habit inside of you. So it's the exact same way that, we talked about this idea of being on stage. You need a certain level of experience to be able to sway your level of confidence. The more and more you repeat those actions and get comfortable with the idea that our mind is going to be swayed in the short term, but actually I can influence it by doing all of the following steps I'm sharing here, you can actually start to sway your ability to either feel too much or too little confidence. I feel like a P&L journals are almost useless because the root cause is in your four-step protocol. So journaling market conditions, bias, narrative, execution is way more logical to me. And again, I don't disagree with that at all, right? For the vast majority of people, too many are making the mistake of understanding that it is your P&L that determines, that is a reflection of your performance. And in reality, P&L is just a byproduct of doing all the things that you're supposed to be doing, right? If you've got your foundations right over a large enough sample size of time and trades, making money should just be a healthy byproduct of that entire process. So as long as you can ingrain that into your mind, I'm not saying P&L is useless. You obviously need to know where you are financially, especially if you're doing things like prop firm challenges. You need to know where you are to stay within their risk criteria to manage how much risk you're executing in the next trade. So they do have their time in place, but they just shouldn't be used to measure your performance in the markets. Okay. So these are the few steps that I want to share with you guys about being able to actually change your level of confidence. Now, the last thing I want to give you is, again, just a very small exercise that I think will be beneficial for the vast majority of you. And again, it's all based on the things that we have discussed inside this session, right? So this is the idea that you need to understand your patterns with confidence. And that means actually going back to times where you've made mistakes. So again, we had at the start of the session, I read out the statistics that I shared inside or from the Discord poll. 52% of you experience one or two overconfidence or a lack of confidence at some point in time. I want you to understand what is your pattern with that confidence. When does it happen? Does it happen after a single loss? Does it happen after a couple of losses? Do you find that after 3 winners, you start to get overconfident? What is your pattern with your confidence? And again, if you're keeping good datas and journals, you can actually start to map this out over time, right? The second part of this is building the data to influence your confidence. So we talked about this idea of keeping folders of perfect setups and setups that just did not work out and went absolutely horrifically despite following your plan, and then filling yourself with those recent experiences to remind you that you either need to grow some balls and stick and trust with the thing that you have seen play out time and time again, or you need to fucking humble yourself and make sure that you're not betting the farm on the next trade, because you've also got hundreds of experiences of where you've done everything right, but it has not worked out the right way, right? One thing that I should do, I'm going to add in between this, and this could be a good point for something to just reflect on, maybe inside of your journals, at the end of your day, in between each trade. Rank your level of confidence, right? And this is something that you can genuinely score from 1 to 10, right? 1 is I have no confidence. I'm shit scared about what's going to happen next, and I don't want to lose any money. And 10 is I've got so much fucking confidence that I'm willing to bet my entire account on this. Where are you sitting on that scale? For the vast majority of the time, I should say people should sit somewhere in between maybe a 6 or a 7, right? 5 is perfectly halfway. If you're a 5 and below, maybe you're going to be filled with too much doubt to actually push the button. If you're like an 8 and above, maybe you're too confident in your ability and you're going to start running into those problems of over trading and you know, all of the other things. So if you're at kind of a 6 or a 7 where you're humble enough not to risk it all, but you're confident enough to be able to do the shit that you're supposed to do, that's probably a good level. If you ever rank your confidence and it's on either end of that spectrum, go back to build that data to reflect, we should say, on the data to influence your confidence, right? And obviously, as a byproduct of having that data, you have to have built it before that. Okay. So I hope that makes sense to everyone. Again, just something very quick and easy to take away off the back of today. But yeah, that kind of wraps up this session on confidence. I'm hoping this has given you some ideas, some insights into why we experience this change of confidence psychologically, why I'm not surprised by the outcomes of the Discord poll, and then most importantly, how you can actually start to leverage some of these psychological principles to sway your level of confidence in the way that you truly need it. Okay, so I will make this these whiteboard notes available with the recording off the back of today's session. Before we wind down, are there any questions? Is there anything? It can be related to today's topic. It could be absolutely anything psychology related whatsoever. Is there any questions that you guys would like to run by me before I let you guys go and enjoy your Friday evenings? If there's anything at all, I'll give you like 30 seconds or so, 60 seconds to throw them in the chat. Otherwise, feel free to unmute your mics if you need to. Shane says, my confidence during a trade is sometimes affected also by breaking a rule before taking the trade. And again, Shane, what you're recognizing here is what we talked about in the exercise, which is mapping out your patterns of either feeling overconfident or underconfident, right? So now what you're starting to develop here is a greater level of understanding to say, if I have broken a rule before taking the trade, I am likely to feel a change in my confidence, whether that's positive or negative. So whether that's overconfident or underconfident has to be determined by you. But now you're already starting to expect, if I've broken a rule, I'm expecting to feel a change in my confidence. And now when that happens, I need to be ready with this, and this to be able to sway and bring my confidence back to the right levels before going forward, right? So Shane, I hope that makes sense. Mehul says, great stream. Thank you. My pleasure. Thank you for tuning in. Cornell says, all clear. Thank you for an amazing session. Thank you so much, man. Shane says, is there any program or software which can help with rules-based trading? Unless you're thinking about going down the route of actually trying to code your strategy into some kind of bot that's going to be able to execute for you, nothing that I'm specifically aware of. I use certain types of software, for example, for journaling, for tracking certain things, to be able to allow me to be more efficient with my process. I don't know if that's what you're getting at. I use things like Edgewonk, or I think a lot of people like TradeZella, for tracking and journaling their trades. And again, I know you can customize a lot of those to make them what you need. I also like to use a lot of Notion, which I think is also quite popular. With you guys, I think I've seen you guys building your checklist and your rules through there. But again, very easy way to just create pre-trade checklist, post-trade checklist, management checklist to, again, just help you to be more process orientated going forward. So again, those are the only two that I'm really a fan of. But I'm not sure which sort of level you're looking to take that to, but I hope that gives you some answer. My pleasure. Any other question before we wind down? Okay, cool. I think we will leave it there. This was session number 7, which means next week we're going to go through our last section together. Last session, what I want to cover is I actually want to share with you guys a complete framework, and it's kind of a culmination of what we've covered over the last few weeks. But to give you a complete framework on how to deal with basically any psychological issue that you may experience at any given point in time in your trading. It's something that I've come up with to help you identify, map out the root cause, really break free of those habits and patterns, and then put you back on the right path for anything that you're going to experience. So the reason I like to end these boot camps this way is you may be experiencing things today which are not going to be relevant tomorrow, and you may pick up new problems tomorrow which may be relevant a week from now. So it's important for you guys to be able to have this framework to apply where you see fit. And I think it's going to just give you a much better process and framework from a psychology element going forward. Of course, if there are any other questions, we will go through those next week. And then, yeah, we've always got the support inside the Discord throughout the week as well. I know many of you are keen on DMs and things like this. Again, available anytime you guys need. Just shoot me a message, whether it's inside Discord or a DM, whatever it may be. Okay. I will leave you guys to enjoy the rest of your Friday evenings, and hope you guys have an amazing weekend. Thank you as always for your time. Hope it's been impactful, and I look forward to speaking to you again next week. Take care, guys.